Thank you very much, Severin. And yeah, I feel like a sorcerer sometimes, a magician. But
we've had you here before in one of our seminars. It was almost a year ago. It was in December 2020, and you said during that seminar, you said, this model is young. The next year will be a test of whether it holds up. So I presume, this test so far throughout this year has held up, in your opinion, right?
I think the China ban was kind of that set it back a little bit, put it off track, and even out of the one standard deviation band, which is rare, as you can see in the history. Although it was outside of that one standard deviation band when I made the model in the beginning of 2019. But yeah, on average, it's very well on track, beyond my highest expectations, and I think. Yeah, crossing the 100,000 level this year, or I shouldn't say that, but or early next year, but I guess it will be this year. Then I'll be like, okay, this is it.
Yeah.
My floor model is not the 200 weeks moving average. I just know that a lot of people use that as a floor model, and indeed you cannot predict with that model. You can just say, okay, we're now very close to that 200 week moving average, so that this must be the bottom, for example. But my model is slightly different, because the 200 week moving average and frankly, most technical analysis is taken from normal markets, equity markets, foreign exchange markets. And Bitcoin has this very specific nature, this exponential nature that we talked about, that it goes over 6-7 orders of magnitude in 10 years time, and with a lot of volatility as well. It's not normally distributed at all. So forget about averages, forget about standard deviations. You need something else. You need a little bit more exotic math. And Nicholas Taleb wrote a lot about this kind of math. It could be power laws and fractal dimensions, Hurst components. That's the area that I took some measures from, and that allowed me to predict not far in the future, like stock to flow, but at least a couple of months out in the future. Let me say this also, right? It's a floor model. It shouldn't be under those measures, those numbers. So 98 for November and 134,000 for December, unless there is a black swan, of course. I mean, it is a mathematical thing. It is a model, and it has been spot on for the last 3 months. But I could be wrong. There could be a black swan event. If we don't hit the 98,000 in end of November, that would be a first on this specific indicator in the entire history of Bitcoin. So in the entire 11-year or 12-year period. So that's why I can be so confident about it. And of course, it's in line with stock to flow prediction, right? So the 135,000 end of this year would be crossing that white line in the chart you show right now. And it would be exactly in line with the stock to flow model. And so that gives me even more confidence that in both the floor model and the stock to flow model, that there's both two clocks telling the exact same time.
Yeah. You've said before that your criteria, or one of the criteria that you would accept for the model being correct or accurate, is whether the predicted price, whether the actual price crosses the predicted price once a year, right?
Yes.
Do you still stand by that? Do you think this is like a be-all, end-all for the model, or is it just one nice to have?
No, I think it's important. It hits on the subject of co-integration, because correlation measures the fact that when the scarcity goes up, Bitcoin price goes up, and it goes simultaneously up and down. So the variance of the one scarcity has a relation with the variance of the other. But co-integration means that the real price sticks to the predicted price really close, and doesn't wander off too far, and that the difference between those two, the model price and the real price, is on average a constant. So yeah, that should happen. Otherwise, the model is will fail. So if we stay for next year, for example, or for next 2 years at the current level or even below that, the model is invalidated. It is very obvious also from this chart that in that case the model would not fit the price. And the same is true for if it goes up. If it goes to a 1 million and stays there, that would be overshooting the model. Problem with the co-integration test is currently that we need 2 random variables to be allowed to apply those co-integration tests. And the price for sure is a random variable, but the stock to flow ratio is sort of determined. Not really. I mean, we cannot predict then when the next halving is exactly, and there is variability because the blocks do not arrive every 10 minutes. Roughly, you could say what the stock to flow will be a year from now, 2 years from now, even 10 years from now. And that's what makes it the stock to flow model such a great predictor, because you know the input variable with a certainty. But the disadvantage is you cannot apply the co-integration tests. If you do the co-integration tests, by the way, you will find co-integration, but we cannot apply the test. So that's a bit of a bummer. But what the test measures is how much the price sticks to that model. And I translated that or dumped that down as, it's above and below the black line, the model line, each and every year. So I think that's very, very important. By the way, I do think that we will have a super cycle or hyper Bitcoinization event eventually, when after the next halving we surpass the stock to flow ratio of real estate, stock to flow ratio of 100, then it will become the most scarce asset in the world, and probably also the most valuable asset with the highest market value, above 100 trillion US dollars. Hence my name. And that's where the stock to flow model sort of ends, right? That's where we have no data anymore. Then we're in terra incognita. We don't know what a stock to flow asset of 200 will be worth, and probably that means that asset will be the de facto money. And right now if we look at that chart on the y-axis, we denominate Bitcoin in dollars, but that will probably not make sense anymore at that time. And probably indeed the dollar might be replaced by something else, Bitcoin or the special drawing rights of the IMF or something else. And of course, all the gold investors hope that will be a gold-backed thing, gold-backed world currency. But I think there's a real chance that Bitcoin will be that better money, thermodynamically perfect money. And then of course, stock flow model is done or must be changed in that the dollar is not. We cannot measure it in dollars anymore, and Bitcoin should shift to the denominator of all other assets. And so really, really interesting times ahead.